Every year, we conduct a market forecast for the coming year. We do this in October or November. And so last fall, we projected mortgage rates would fall throughout 2025 down into the low sixes. That's that black line. But what you'll see is the pink line. What actually happened, we were a little optimistic. So what we had to do was revise our forecast. And we just did that last month for the rest of 2025. And so what we think is going to happen with mortgage rates is that they're going to fall throughout the rest of the year into the mid to low sixes. We have it coming to the end of the year at 6.4% with an average of 6.7% across 2025. So where we are now, we think is going to be the average for 2025. And then we think that by the end of the year, we're going to be down closer to 6.4%. What we saw last week with the jobs report revisions is going to add pressure to the Federal Reserve to cut rates. And so we actually might see an acceleration of this downturn in mortgage rates in the coming months a little bit quicker than we anticipated. And so we're hoping that if inflation numbers continue to come in where, is an acceptable range, and employment figures continue to come in a little bit softer than expected, that the Fed will have a mandate to cut rates, and that should make its way into the mortgage rate market, and we'll hopefully see some low sixes by the end of the year. So we're calling for a little bit of relief from mortgage rates coming soon, which is good news for buying now. Even if you think maybe I'll wait until mortgage rates come down. What we'll see in a little bit is that when mortgage rates fall, prices tend to rise. So it could be a good opportunity right now to buy and then refinance in the near future when rates come down, lock in a price that comes from a period of higher mortgage rates, and then eventually refinance into paying a little bit less interest on those payments.